Canada's economy grew at an annualized rate of 2.1% in the second quarter, surpassing economists' expectations of 1.8% growth. Our next guest says GDP growth will remain weaker than population growth, however, leading to lower gross domestic product per capita. He's also looking at something called a recession. Charles St-Arnaud is chief economist with the Alberta Central and former economist with the Bank of Canada. Charles, thanks a lot for joining us. We'll just put up on our screen a snapshot of the numbers that we're talking about this morning. There you see the gross domestic product numbers released at 8:30 a.m. Eastern Time. June gross domestic product growth came in at 1.2%. The second quarter numbers, June being, of course, the final month in the second quarter. Gross domestic product growth in the second quarter comes in at 2.1%. That was significantly stronger than economists had forecast. The economist forecast there was for 1.8% growth in Q2. And the first quarter number has been revised upward to 1.8%. It was initially reported at 1.7%. Charles, what's your early take on these numbers?
Well, the early take is that when we look at the economy overall, it seems to be holding up. The growth rate is relatively okay-ish. It could be, I think we would prefer to have hit slightly stronger. But it's when you start to look at the detail, especially in Q2, with the fact that a lot of the growth is coming from government spending, it shows that the rest of the economy, especially consumers, are not doing that well.
How long can that continue? Gross domestic product boosted by government spending. We've heard, for instance, about the enormous amount of hiring that's gone on by the federal government over the past couple of years.
Yeah, well, that's the risk, is that you cannot continue to just be driven by the public sector. You need the private sector to take the relay, and we're not really seeing that. So especially when we look at consumer spending, yes, they've been increasing, and yeah, they decelerated quite sharply compared to the second quarter, but they're still positive. But it's when you start to look at consumption per capita is actually declining again in the second quarter. So it's again the case that collectively we're spending more, but individually we're actually spending less. So that if it was not for the growth in population in Canada, our economy would be much weaker.
There's also, there was a flash estimate, I believe, released this morning as well, and I'm just going to get my hands around that. That would be for July economic growth from StatsCan. So let me try and cue that up. Let me get that now. Sorry for the delay. Bloomberg News has written a piece on these numbers. The preliminary data suggests momentum stalled heading into the third quarter with a flat reading in July. That's what StatsCan is reporting this morning. How do you interpret that, Charles, a flat reading to start the third quarter?
Yeah, well, it implies that as we get into the third quarter or the second half of 2024, the momentum in the economy was very weak. So unless we have an acceleration in growth going into August and September, it means that growth in Q3 will likely be weaker than what we've seen in Q2. And that kind of primes the reason why the Bank of Canada has shifted its focus from fighting inflation, especially that now inflation is well within their objective of 2%, between 1% and 3%. The shift is now towards more the downside risk to growth, the fact that they don't want to see too much slack getting into the economy.
There's nothing here that would move the Bank of Canada off its assumed posture of cutting rates next week, correct?
Correct. I don't see, there's nothing in there that could suggest them that they should take a pause. And there's nothing overly concerning that would warrant them to accelerate the pace and go for a 50 basis point. I think the report is really, the economy is feeling the impact of higher interest rates, especially consumers and the housing market, and that lowering the interest rate, bring it back gradually towards neutral, will be the right path.
Has the Bank of Canada articulated a concern about declining per capita GDP growth? A lot of commentators and economists in the private sector remark on that our economic growth in the aggregate is really a story of population growth. And if you factor out population growth and put things on a per capita basis, GDP is and has for a while now been declining in this country. Has the Bank of Canada expanded on its views on that subject?
Well, obviously, what's going on here is that the strong population growth has been a big boost for the economy and actually has allowed growth to be stronger. But as you mentioned, and we see it in the data, consumption per capita continues to decline. Actually, if we look at consumption per capita in adjusted for inflation, they're actually about 2.5% lower than where they were pre-pandemic. So individual consumers are spending less. And part of that is a result that the weak growth is also generating weak growth in disposable income. Real disposable income per person is actually declining again. So that purchasing power continues to be under a lot of stress in Canada.
What is a me-cession? That's a term that you're using.
Yeah, well, it's just when we look at the data, as I mentioned, consumption per capita is continuing to decline. So individual consumers are actually reacting or behaving as if they were in a recession, cutting their spending. But when we look at aggregate demand and aggregate consumer spending continues to grow, and that just because of population growth. And I did some simulation and some estimates is that if it was not for population growth, just because of the decline in consumption per capita, the economy would have the Canadian economy would have contracted at the end of 2023. So we would have Q3 and Q4 2023 in negative territory. And to give an order of magnitude, Q2 growth, yes, was reported at 2.1%. But if we were to imply that population growth have increased at the same trend as pre-pandemic, growth would have been closer to 1.5%. So it's still a significant impact just from that population growth.
Charles,